It's Matt Santagapita from the Mulligan Realty Group, and this is another episode of our Monday Market Update. And so it is April 15th. It's finally sunny. I think the cold weather is finally behind us. We have definitely started to see a more active market. Listings keep going up. Sales keep following, but we do need to see more sales than we are seeing. But anyways, let's get into the numbers because I want to talk about inflation and why we might actually see an interest rate hike, at least in the United States, before we see rate cuts. And if the US goes up, Canada has to stay flat. Anyways, let's get into the numbers. So in this past week, we saw 193 new listings come to market in London. Conditional sales are sitting at 63. Sold pending at 128, and then price decreases. We actually saw 57, which is actually a pretty high number, but I think it's in line. We do need to see prices come down so that homes keep selling. Anyways, so let's get into the big elephant in the room, inflation numbers. And the more important inflation number, and I've said this in the past, is US inflation. The United States, their economy globally is the most important economy. They kind of drive everything, whether or not we like it or not. That's just fact. And they just released recently their March inflation numbers. And March, for them, inflation was at 3.48. Now, in the United States, just like in Canada, we have an inflation target of 2%. And until we get closer to that 2%, well, no one's cutting rates. They've said that over and over. Now, 3.48 doesn't seem like a lot. However, when you look at the trend over the past 3 months, it's going in the wrong direction. So December of 23, the United States inflation was at 3.34. January of this year, it dropped to 3.09. February, it ticked up to 3.15. And then March, 3.48. So after going through a quarter of inflation essentially increasing, you have to wonder, are they going to cut? And quite frankly, I don't think we're going to see a cut in interest rates out of the United States anytime, probably actually in the next 3 to 6 months. Now, we're in Canada. Why is that important? Well, why that is important is the Bank of Canada, can't cut rates too early. It's bad for our dollar. And why that's important is that if our dollar falls in value on the global market, our cost of living goes up even more. So we're kind of caught between a rock and a hard place right now. To go over Canadian inflation numbers, so December 23, Canada's inflation numbers were at 3.4. January trending in the right direction at 2.9, February at 2.8, and tomorrow at 12:30 we're getting Canada's inflation numbers. Honestly, don't know where we're going to sit. I hope it's going down, but part of me wants to say I think it's flat. It might come in at 2.8. It might even come up at 3. I don't know. I feel like prices of things keep going up, except for housing. But I don't know. It's going to be very interesting. And I know this is probably kind of like, the not so fun Monday market update. But the reality is that if inflation doesn't get to their targets, or they don't change their policies, that's the other thing that could change. So if all of a sudden they say, hey, 3%, we're good, well, that's a different conversation for the US Fed and the Bank of Canada when it comes to rates. But that conversation's not happening. In Canada, we've seen some adjustments for first-time home buyers on mortgage lending, which is great. It's a start. However, it's not going to be enough to kind of stimulate things the way they want and make life more affordable, let's say. Everybody I talk to nowadays talks about food inflation is crazy, energy prices are nuts. I don't know. It's an interesting one, but I know everybody's anticipating a rate cut here, at least in Canada, by June. I don't see it. I just don't, not unless we see a major slowdown. I know Canada wants to cut because our job market is getting a little funky. But again, it's a fine line, because if you cut rates and the US is not cutting rates and they potentially go in the opposite direction, you see a weakening of the Canadian dollar, which then slingshots us back into inflation. So I don't know. We're in a pickle. Anyways, if you got any questions, love to hear your comments. Again, it's Matt Santagapata from the Mulligan Realty Group. This has been another episode of our Monday Market Update.